and about 800 stocks which are lower. So it's close. I mean, it's not runaway or anything in either direction, and that is not bad news. Adani Ports is the one that I'm watching. It's now down to the lowest point of the day. And yesterday's low, by the way, was what, 424? We're at about 438. So it's not very far away from the day's low on Adani Ports.
You know, Prashant, just one more point. In the month of February, normally towards the end, you have the NSE revision that takes place on the number of nifty stocks that come in and move out, which will be effective from the end of March. The date normally is 31st of January, and we've seen a fair bit of volatility. So I'll be tracking this change, this revision in indices rather closely because of the way both these two stocks have underperformed. So let's see whether or not, there is a change that comes about. They'll go according to the last 6 months free float, but let's see what happens to both these two because they're part of the index.
No, that'll be absolutely two of them, of course, part of the Nifty index.
Yes.
We'll see in terms of changes. Atul Suri is with us. He's CEO at Marathon Trends PMS, and he's joining us from our studios here. Atul, great to have you with us here. Thanks very much.
Nice to be here.
We've been, of course, fixated and naturally and correctly so on what's happening here. But this global scene is turning out to be pretty good. I mean, has something changed? Because, or is this still a bear market rally, as many are saying
no,
it is? What's your sense?
I get a sense that actually we are starting a big global move up in equities. See, the last year has been a washout. In India, though, optically at an index level, we've been flat. But if you look at global markets, like you're talking about 30% knocks in US indexes, which is a lot, which is massive, right? So India, fortunately, has been insulated. But these markets are actually doing a very big catch-up. You're actually seeing that, what do you call a short covering bounce, that kind of momentum you're seeing. And the spaces that are beaten the most are actually seeing the biggest spring, like let's say the NASDAQ, for that point of view. So what you are really seeing is a very big bounce back globally. But I think this will actually move on to gain more strength. Like if I look at the US indices, if you look at something like, we look at something like the NASDAQ or the S&P 500, but you look at the Dow Jones Industrial Average, you'll realize that that is something that was the early breakout. You look at the mid-cap space, the small-cap space in the US, you see that there is very good breadth. And that gives me a sense that I feel that there will be a fresh up move in the US. A lot of these indexes, they'll take time. It's not going to happen in the next few weeks, but they will recover their earlier highs, which I think will be phenomenal for global equity. So I think there is a very big move. It's not just US. You look at the European markets. In fact, they have been more impressive in the last few months than even the US. So what you are really seeing is a global synchronized move in equities. In India, we feel bad about it, but hey, you know what? You just can't take a 1 month or 3 month view. Let's take a 2-year view. I think we are still one of the best performing markets in the world.
But Atul, the point is that...
to that view that we're starting something, a big global equity bull market, you don't think central banks will come again and smack it down? When you're in the midst of sharp pullbacks, it's just a question which I have to ask. Maybe, and I tend to lean towards your view, but anything is possible. It's markets,
right? Absolutely.
In the midst of ferocious big bear market rallies, always feel like it's the start of something new. It's probabilities game at the end of the day.
Definitely. See, at the end of the day, Prashant, nobody knows the future. We can't predict tomorrow. Look what happened last week. We were at 18,200 Nifty, and we felt like with a good budget. 3 days ago, I think in the budget, the first half, we felt, well, it's all over, done and dusted, and see what happens. Anyway, that apart, we're talking about central banks, I think you should look at bond yields. Because the governors are saying one thing, they are continuing to sound hawkish, but you'll find where the bond markets are. You look at the US 10-year, I think that's a very good indicator of market sentiment. I mean, that is below 3.5. That is, I think, 3.4 or below that also. So I feel that if US bond yields remain below 3.5, which if you look at the charts, etc., you'll find that there is a great propensity for it to go lower. If that happens, look at the way the dollar is behaving. So, these are very big asset classes. These asset classes like bonds and dollars are not a function of one quarterly earning or sentiment. These are giants. These are the elephants in the room. So, if you really look at them, I think that is what gives me more bullishness than just what Meta does for 2 days and like people get bullish.
Take your point completely, Atul. But okay, here's the question. The fact is that we've been disconnected, right? And who better than you to ask this? I know it's only 1 month and we shouldn't get carried away with one January performance and our underperformance. But if you go back and look at, periods in the past where India has been sort of, dislocated with a global tidal wave of equities rising higher, What do those periods tell us? And could this be such a period again, a long period of a disconnect?
See, Surabhi, it's again a question of time frame, right? If 1 month they say, oh, India has not done well. Hey, how about taking it 2 years?
Yeah. No,
I'm just giving you.
I'm just worried that, you know, will it be just 1 month? Could it be 6 months? Could it be a 1 year disconnect?
It could be. Who cares? But the fact is, let me tell you, if you overlay charts, see, as an investor, you're not looking at 1 month and 3 months. So I'm speaking from an investor's point of view. If you overlay charts of country on country on country and country, you'll find that there's a sync to it. In every rally, there will be something that will outperform, there will be something that will underperform. But net, the bigger picture, you know, when the globe moves
up.
It's a question of money moving, and we are a globalized economy. That's why I think what I spoke to Prashant about bond yields, about currency, they give you bigger clues of flows of funds. Yeah, sometimes now people are getting, oh, China is a great
China's
place.
getting the money.
But that's nonsense. You know, if you go back and look at markets 2 years, 1 year from that point of view, where would you be in a China or a India? So it's very nice and cute to talk from an Excel spreadsheet or at a cocktail circuit that, you know what, boss, the best investment last few months would have been to buy the ARK fund. Hey, you know what? ARK fund has come from 140 to something like, 140 to something like 20 or 30 bucks. From 30, it's gone to 45. So it's very nice to talk about it. You know, so these things are very good. They're good numbers or statistics. And even in statistics, what is the time frame you use? The moment you change the time frame, the story changes. So I have to understand what is my time frame. If it's 3 years or 2 years, you'll find that India is the best performing market. We have fallen the least. And we were the first markets to break out to lifetime highs. We were the first market to break out a life. If we are taking a pause and we are letting the world catch up, and you have a very big Adani saga, if that also gets out of the system and the markets continue to make this thing, I think that really shows the quality and strength of the market.
Right now, Nigel, stocks are not responding at all. I mean, Adani Ports is down 9%. And across the board, there is still selling pressure. Ambuja, ACC, we were talking about that clarification, 3%, 3.5%, even in the cement assets.
Yeah, I'll tell you what, you know, the bigger problem is the bullets are gradually leaving the gun, you know, and they're not having that big an impact. So I'm a little worried on that front as well, because you have ASM, you expect some bit of stability. That's not happened. Yesterday, you thought maybe there'll be some naked shots in the system, but let's keep this saga aside for the time being. Well, Atul, you know, talking about the cocktail parties has become easier, right, to go, because then everyone's not giving you all sort of gyan or advising you now with the markets a little bit brittle. That aside, you said pockets of strength will still be there, right, in the Indian markets. And in the past, we've spoken about defense, we've spoken about the PSU banking theme. Some of these themes have corrected. Is it giving you a good entry opportunity? And what's the theme that you think is looking good now?
No, I think speaking about PSU banks and banks, it's very important. It's the most important sector as far as the index movement goes. Now, you have an Adani issue, which we all know about. See, nobody had a clue as to what was happening, and nobody knows how it's going to end. Yes, it becomes excitement, 10% up, 10% down, all that. But I feel it's fairly insulated. The important part is that how many funds own it, because that's what's going to affect. How many retail investors own it? Very few. Those who own the derivatives market have got cleaned out because their margins have got wiped out. So net, the question is how much collateral damage is it going to create? The collateral damage it can create is in banks, because obviously they have lent to it. But in spite of an event like that happening, if banks pull up and are able to recover, in spite of such an event, I think that will show intrinsic strength. And these become, you know, opportunities to buy. So I feel that the whole Adani issue, yes, it's an important thing, but if it remains insulated and there is no major collateral damage, and we are seeing that in the markets in the last 3-4 days, that there are still sectors and stocks making new highs. It's not overall across the board. In fact, I think a lot of people are using these opportunities to get into other spaces.
You know, Atul, as you speak, in fact, the Nifty bank that took a harder knock, that's seeing a good bit of recovery. We're up close to around 500 points out there. And I think SBI's numbers today will be very, very important because of the commentary. Results aside, the commentary will be rather important. But this entire China theme is playing out. One way to play it from an India perspective is the metal theme, the metal stocks as well. And they have done phenomenally well, actually. Do you believe commodities still have more room on the upside?
Yeah, I think that's very interesting because, you know, I was one who believed that the commodity story was over. It did very well in early 2022 and then it corrected and I thought it's over. But a lot of them have come back. Like I look at copper because I think copper is a very good windmill towards the whole commodity move. I find that commodities have made a recovery and that whole thing that commodities would really tank out is not really happening. In fact, even if they remain stable and a little on an upward bias, I feel that a lot of these metal stocks, and not just the 3 or 4, there are a lot of other derivatives to it. are looking very, very interesting.
From a positional perspective, give us 5 ideas.
Oh,
if you
5.
will. 5 ideas.
No, not 1, not 2, but 5. Or
Thankfully, he
10.
didn't say 5
Okay,
stocks.
let's take
He's
10,
saying
let's take
ideas.
20.
You want to give us 10? 10? Go ahead.
No.
Or 3, whatever. Where are you most convinced about? Setup-wise.
Yeah, sure, Prasad. So I think the question that comes up is that thematically, I feel, so I have been bullish on the market and I still retain that bullishness. But I think the bigger money as we are positioned is we feel that there is a very big shift that is happening thematically. Like I talked about the US. So let's start right from the top. You find that the Dow Jones Industrial has done much better than the NASDAQ or the S&P 500. So really you find that the industry-facing stocks, even if you look at new 52-week highs or lifetime highs happening in the US, they're more in the industrial space. So industry-facing stocks are doing much better globally. Even if you look at the Indian markets, you will find that whether it's banking, the industry-facing banks, you'll find things like capital goods, things like infrastructure. These are doing very well. Engineering. And for a decade, you will remember that we have been dominated, or the other side has moved. You know, what we call the high P stocks that did well even whatever the economy was doing, they were captive consumption. But I think the whole market is telling me or indicating to me that we are moving towards a revival.
Banks, capital goods, engineering.
I think engineering, and even in engineering and cap goods, there are a lot of sub-segments. Like I think the electrical equipment place, there are a few of them, but I think they are like an absolute different story that is happening out. So I feel that we will have to recalibrate. There will have to be a churn in the portfolio, and we've been doing that. And we see ourselves more oriented towards the industry facing, because whenever an industrial cycle or a cycle turns, then the bull markets are not short because they're not liquidity driven. These tend to be 3 to 5 years, and then the kind of money that you make is massive. So I feel that the globe is moving back to industry, moving back to manufacturing, rather than just pure services or the leverage trade.
So, Atul, just one final question before we let you go. We've got the big macro picture. Just the here and now, you made a point on Adani and related issues. You said everybody in the F&O market has anyway been cleaned out. Just want to get your sense on these new additional surveillance mechanisms that have come into place. And maybe we don't know if more stocks get added or not. Sure. Purely from a leverage and market perspective, if the authorities and regulators decide to take more stringent just surveillance norms, is there going to be a domino effect in the market on other Adani stocks or other stocks, just on the technicals?
See, I'll tell you, as far as Adani stocks, where they will stop, what will happen, we don't know. Look at like that day's FPO getting cancelled. I mean, even an hour before, if somebody told us, you'd laugh at their face, right? So the fact is, we really don't know, because we didn't even know before, we don't even know now. And the good part, as I said, is that fortunately, we never bought Adani stocks, and most never bought it. The problem is collateral damage. As long as there's no collateral damage, they will do their story. They will keep you guys excited and keep you guys busy.
That's what I was asking. As long as the rest of the market is kind of
as long as the rest of the market, and even in there,
and you believe that's the case?
Yeah, and then look at, I think for me, there the litmus test is banking. For me, the litmus test is banking, because ultimately they have a bit of an exposure. If that holds out, that recovers, that gets bought into and takes out new levels, this thing is done and dusted with. And we have to live with that story here.
And
we need less excitement, not more excitement.
I know, you guys are having busy times here.
We need less wired, not more.
Yeah, I can
Thank you very
imagine.
much, Atul. It's a pleasure.
Thanks, guys.
Thanks for with that perspective. I want to just quickly point out what's happening with Adani Enterprise.